Hello students, my name is Jamiu, Olakunle Tijani. I'm your facilitator for lesson 5, where you are expected to learn about the fundamentals of International Financial Reporting Standard. This class is a continuation of lesson 1, 2, 3, and 4, where you must have learned about the backgrounds to accounting, the meaning of bookkeeping and accounting, historical perspective to accounting, users and characteristics of accounting information, and accounting concepts and convention. So the class promises to be as interesting as ever, and I'm so sure that you're going to have a swell time in class. I welcome you.
So let's have an overview of today's lesson. The first one is objectives of the lesson. The second one is fundamentals of International Financial Reporting Standards. That's the crux of today's class, the essence of today's class. Before we'll take questions and answers, and then summary and conclusion. I hope you're ready. So objectives of the lesson. At the end of today's lesson, you should be able to, number one, explain the meaning of International Financial Reporting Standards and state the justification for International Financial Reporting Standard, as well as relate with the organs that are responsible for either issuing or promoting the international acceptance of these standards. So, overview of IFRS. IFRS is an acronym for International Financial Reporting Standards, as noted earlier, and they are designed to be a common global language for conducting business affairs. So their essence is we want to have one language, one business language with which we communicate, so that irrespective of where you find yourselves on the part of the globe, in any part of the world, we can communicate in business terms and understand one another. And as you can see, so devising a common global language for business affairs is essentially to ensure that the company's accounts, otherwise called financial statements that are prepared, are understandable and comparable across international boundaries. International boundaries, and that is the emphasis, that's the essence of the high in IFRS. International, it has to be international, truly international. So IFRS began as an attempt to harmonize accounting practices across the European Union. The European Union is a coming together, is a union of countries in Europe. So, and members of European Union include France, Germany, Belgium, Austria. Presently, United Kingdom is also a member. Italy, Spain, Portugal are members of European Union. And that was where the experiment of IFRS started. So, as one common political and economic bloc, they wanted to evolve a practice where the financial statements that are prepared in different countries that belong to that block can be compared and effectively harmonized. So why IFRS? What are the essence of IFRS? What are the justifications for IFRS? The first one is IFRS helps to remove divergence and discrepancies in financial reports. Divergence, that is where the word harmonization comes from. So that when you prepare an account in Nigeria, the account can be compared with any other account in any other country where IFRS is being employed. So it helps to eliminate divergence and discrepancies. IFRS are called modern day accountant universal acceptance. Universal acceptance. And this is simply because you speak one common global language for conducting business affairs. So it provides buffer. IFRS provides buffer to international trade and investment. So that is even if one of the major reasons for adopting IFRS. So it ensures free flow of goods and services. Capital mobility is one of the things that IFRS is expected to aid. And the countries where the standards have been employed, I think that there are pieces of very, very strong evidence that IFRS has helped to achieve this. So IFRS helps to situate the accounting profession in the globalization and digital age, so that we are not left behind. And lastly, it helps to minimize the risk, relating to uncertainties in financial statements. So these are some of the 5 cardinal justifications for IFRS. So what are the organs involved in IFRS? When we say organs involved in IFRS, we simply mean what are the bodies, what are the institutions that are responsible for issuing and promoting the acceptance of IFRS. The first one is IFAC, International Federation of Accountants. So this is a body of well over 170 professional accounting bodies. For instance, in Nigeria, they recognized by law, the 2 recognized professional bodies in Nigeria, such as the Institute of Chartered Accountants of Nigeria and the Association of Chartered Accountants of Nigeria, are members of IFAC. So no individual member directly, can claim to be a member of IFAC. So you belong to IFAC, you become a member of IFAC by becoming members of a recognized professional bodies. And IFAC is known to be number 1 promoter of IFRS. They are number 1 backer. They are number 1 promoters of what? IFRS. They have supported IFRS projects in many ways, including funding, including technical expertise amongst us. So we cannot exhaustively discuss the organs that are involved in formulating IFRS and promoting its worldwide use and acceptance without mentioning IFAC. So also move to International Accounting Standards Committee. This body was set up in the year 1973 to write standards, to issue standards and promote its acceptance. It was in 1982 that all members of IFAC were made to be members of IASC, so that the breach can be closed, can be reduced instead of it getting widened, because these 2 bodies are supposed to work together, not at cross purposes. So that is IFAC. So International Accounting Standard Committee was established in 1973 by 9 professional bodies. So these 9 professional bodies were the ones that laid the foundation for IFRS as we have it today. So the IASC was the one responsible for issuing international accounting standards, and it did that from 1973 up until 2001, when International Accounting Standard Board came to replace IASC. So IASB took up the responsibility of issuing standards, but there was a fundamental change in the approach and in the way these standards are being designed and issued. So, but one striking thing that IASB came with in 2001 was that these international accounting standards nomenclature were changed to International Financial Reporting Standards. So, and as we speak, this body have issued no fewer than 17 or 18 IFRS. No fewer than 17 or 18 IFRS. So, the other one is the National Financial Reporting Standards Interpretation Committee. Sometimes when IASB is done issuing standards, so there may be some contentious areas. So those contentious areas are, the battleground for IFRIC. So they are saddled with the responsibility of interpreting, the standards that have been issued by IASB, so that the contention that may arise therefrom is reduced as much as possible, and this helps to increase understandability of the standards issued. And the last one, the Standard Interpretation Committee. These standards help to, interpret the standards. And there's another one also, the IFRS Advisory Council. So those ones offer advice not only to ISB but to the monitoring committee to which the ISB is answerable.
Now, having taken today's lesson, let us entertain one or two questions from two of the students that have participated in today's lesson. And to my right is Odlri, you're welcome. And to my left is Olakunle. So now your question, Daniela.
What are the importance of IFRS?
Oh, the importance of IFRS. So the importance of IFRS, in fact, IFRS is very, very important. And one fundamental thing that we can say about the importance of IFRS is that IFRS enhances comparability of financial statements, such that if any financial statement is prepared in Nigeria, and another one is prepared in China, another one is prepared in New Zealand, and another one is prepared in Singapore, you can easily compare the content of this FS. In time past, what used to happen when we were adopting our local standard was, you see our FS being converted to an IFRS compliant financial statement before they can compare. And one way or the other, it was impacting the free flow of capital in and out of Nigeria. So one benefit that IFRS has brought to Nigeria, no doubt, is that it has helped to channel foreign direct investment or foreign portfolio investment to Nigeria. I hope you're satisfied?
Yes, sir.
Oh, thank you very much, Eniola. So now, let's take your question.
All right, sir. And my question is, does the IFRS make provisions for small and medium enterprises?
Oh, absolutely, absolutely. It really does. If you look at IFRS rates, we have it not only for large size entities. So there are even specific standards for small and medium enterprises. Let me put you through this. When IFRS came to Nigeria, it was first of all banks, public interest entities, or listed companies that were first obligated to adopt IFRS, and that took place in the year 2012. So other firms were given up until 2013 to adopt, and small and medium enterprises, by the roadmap laid by the federal government, they were expected to fully comply with IFRS in 2014. So, as we speak in Nigeria, I don't think there's any small and medium enterprises that will pay FS that will not be compliant with IFRS. So, IFRS not only affected large organizations, but also affects small and medium enterprises. So, I hope you're satisfied.
Yes,
well, thank you very much, Thank you very much.
So let's wrap up today's lesson. Let's wrap up this lesson. So I'm very, very certain that at the end of this lesson you have learned that IFRS are designed as a common global language for business affairs, and importantly, they have assisted in ensuring that financial statements that are prepared are comparable across international boundaries. So in the next lesson, you'll learn about double entry principle and accounting equation. I'm sure you've had a wonderful time. Thank you.